Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Monday the 16th, and we had corn and soybeans trading lower here with wheat in a little bit of a short covering situation. Up 13 cents on the day. Corn closed down 1.5 and soybeans down 5.25 cents on the day. Let's take a look at export inspections. This morning we did have corn come in on the low side of analyst expectations here, seeing only 735,000 metric tons inspected for export. Analysts were expecting between 900 and 1.1 million metric tons. Soybeans came in within analyst expectations with 583,000 metric tons. That was, of course, like I said, within analyst expectations, even on the higher side of them. So that was very positive there to see for soybeans. And wheat coming in at 519,000 metric tons inspected for export there, right in analyst expectations. So nothing too big for a surprise. Now, why did wheat go higher here? I think what we're seeing is a lot of short covering. I know that when you look at the wheat chart here, you'll notice that we had lows printed a couple Fridays ago, and really ever since then we've been just clicking higher. Well, today we had a red. It was a red flag alert there from Texas, Oklahoma, Kansas. Basically very dry, very windy conditions. This is not very good, especially when you consider the warmth that we've had in that region. Some of that wheat is coming out of dormancy, and so this is very, very negative here for the wheat crop. Now, I think there's another thing as well, is that you have in Europe and Russia, you're having unseasonably warm temperatures over there and dry temperatures as well. So there's a little bit of concern out here for this wheat crop. We did get some revisions lower there. Kansas moved their good to excellent ratings for wheat down to 41% good to excellent, down from 46% a week earlier. So that was very negative as well for the wheat crop, and one of the reasons why I think we're getting this short covering rally here from wheat. You'll notice that the dollar index did pull back a little bit today. That probably helped wheat out a little bit, especially with this weather news. There is some precipitation that is moving through the plains here this week, but it seems to be generally pretty light. So there is a little bit of concern there for the wheat crop. Let's look at the NOPA crush numbers. NOPA crush numbers came in at 146.970 million bushels crushed for February 2015. That was up from last year of 141. It wasn't quite a record high, unfortunately. The last record was back in 2010, was a little bit higher than what we saw here out today. But that was relatively good, but did miss analyst expectations, which averaged in a poll of 8 analysts, averaged at 148.537 million bushels crushed for the month of February. We also saw a soy oil come in a little bit shy of analyst expectations, but not by a whole lot here. 1.322 versus average analyst expectations here of 1.332. So really, when that news came out, not a whole lot of movement there in soybeans. We were trading about a penny lower, a couple pennies lower. Really not a big reaction. We just didn't move a whole lot following that report. And it looked as though soybeans kind of closed on the lower side of the day's range. I wouldn't be surprised if we move back here to that red line, that previous low that we saw back here at the end of January and also the very beginning of February when we printed those lows. You can see here in the chart the daily, this is a daily candlestick chart. You'll see that red line represents those lows. I think we have a few more cents to go before we reach that level, but I wouldn't be surprised if we get a little bit of support down around that level here in the coming days. Other than that, South America looks to be, for the most part, no big concerns. There is some big protests going on down in Brazil. It seems to be going throughout multiple cities, but it is not related to the trucker strike, and I do not believe that it is threatening at all the logistics or the ports and moving grain throughout the country. So I don't think there's any major concern there. Part of the reasons why I think soybeans just continues to get weighed down here. Just a very, very large crop out of South America set to weigh on prices here, kind of loom over prices for the remainder of the month. Guys, if you have any questions about what we're talking about here today, give us a call. The number is 877-472-4607. And remember, if you haven't done so already, go ahead and take a demo of the 14-day free trial. You can do so at grainhedge.com. Just put in your name, your phone number, and we'll get in touch with you. Make sure you receive that download. Make sure you understand how to use it and how you would apply that platform and that technology to your own marketing strategy. Thanks a lot for tuning in. We'll see you here on Tuesday.